Welcome back, RealVacantLand.com. My name is Luke Smith, and today we're going to talk about land flipping versus adding value. I've done a lot of land flipping. I send out letters, I buy land, add pictures, go sell the land. Over time, the markets have changed. The competition's gotten a lot greater. A lot of other people are sending out letters, or they're emailing, or they're texting, they're calling. They're doing lots of ways to reach out to landowners, say, "I want to buy your land," and so it's gotten harder to go buy generic pieces of land and go sell them for more on the internet, right? And so I've looked at lots of different ways, lots of different strategies, tried lots of different ones, and I've got my favorites, and I'd like to share some. I was working with some other people and looking at different angles, and I compiled some data. So let's jump into it. Okay, so I made a little spreadsheet in the background here. I'm not going to just focus on this boring stuff. I'm going to focus on the idea. The idea behind me in this spreadsheet is that we've got some Dutch brothers. So these are addresses of Dutch brothers. This is I don't know, six different Dutch brothers locations, all in Florida, and they're all for sale on the internet right now. So this is a shop that is leased out to Dutch brothers. They sell coffee and other drinks, and they're drive-through shops, QSRs, quick service restaurants, and it could be, this example could be all kinds of other things. It could be McDonald's or Burger King or Wendy's or other brand names, but in this instance, it's Dutch Brothers, and Dutch Brothers is growing really fast. They're opening locations all across the country, and they're eating up land. So if we know who's eating up land, buying land, and we can deliver land to them, I think that's a good thing. So if we look at what kind of land they're buying, what kind of attributes they're going after and they're using, and we target that land, I think that could put us in a better scenario. So let's talk about these ones. I've got I've got links to the properties. I'm going to pull up the properties here. We're going to analyze them a little bit. I've got how much they paid for these properties, the year that they bought these properties, and now how much they're asking for these properties. So these are other land flippers, and these are their numbers. The spreads between these numbers are all $1 million plus. The NOI is the net operating income. That's how much the Dutch Brothers has said that they're going to pay in rent going forward on these properties. The cap rate is the NOI. That's the rent over what the asking price of the property is. And they're all falling right around that 5% kind of number. I've got traffic, so direct traffic. I looked at traffic like right out in front of this properties, how much cars are going by, vehicles per day, how many people are there, right? I've got the size of the property in acres over here, and this one's a little bit bigger, but most of them are just a hair under an acre. Um, Study the access on these. We'll look at that. The population is starting to fall off the page here, but if I move it over a little bit, there's population and income, like median income. I think it's 3 miles. I did a 3 mile kind of income there. Um, oh, and I was gonna just throw those. Okay, so I've got some basic numbers, some basic criteria. So now if we jump into the first property, if we take a look at the first one on the list, I think you'll start falling in line with what kind of land we're talking about. And so not all these pictures are the actual pictures of the locations. When people are selling these properties online, lots of times they use a representative picture because it's still under construction, it's still being built, it's maybe not even broken ground yet. It's coming along, they have the dates and stuff. And so on this first one's in Pensacola, Florida. Um, they're asking $2.9 million, this number over here, and they rented this one out for $150,000 a year. And so, Luke, how do you take land and rent it out for $150,000 a year? Well, the Dutch Brothers probably isn't actually paying rent yet. If we look at the dates on here, maybe they did. It says year built 2024, 950 square foot. They're selling this for $3,000 a square foot, and the lease term is 15 years. It's absolute triple net lease. That means that the tenant pays for the taxes, they pay for the insurance, they pay for the roof, they pay for the walls, they pay for the maintenance, they pay for the landscaping, they pay to take care of the parking lot, they do the utilities, they take care of the employees, the supplies coming and going. They make money on how much they can sell their coffee and everything for above and beyond this $150,000 a year in rent, and they pay the rent and they take care of everything else along the way. They've got a big name, a good credit rating, and so you know they're going to take care of it. They want to take care of their name, and so it's just check in the mailbox kind of deal. It doesn't even do checks anymore; it just goes straight to your bank account, and it's so solid, so sweet and for sure that the banks are willing to loan against that pretty well. The banks will take the money first and then send you the difference, just direct deposit straight into your bank account. So it's really easy to finance these kinds of properties too. The people that like to buy them like the depreciation they can get off of these kinds of deals, and the cash flow they can get out over time, and the tax benefits of like 1031 if they're selling their apartment complex or something. They can use these things as a money market account in between while they go buy their next redevelopment deal, next apartment complex they want to resurface and raise the rent on or something like that, right? They can just own these in between. They trade pretty easily. The price that you can trade these at is pretty straightforward. You look at the rent and you look at how much does that go for with their credit rating, and you get a cap rate, and it's a financial instrument that you're creating, and it's some math, and the buyer's looking at the lease, making sure they don't have to shovel the snow or something, and saying, okay, it's a straightforward lease, and then they buy it with pretty short closing time frames and minimal, if any, contingencies, and take off with them and go. It's a huge night and day difference from buying land or selling land. When I'm selling land, the contingencies are, the list is a mile long and the timeline is just as long, right? And so when you're selling commercial land, so if you can turn the land into an operation that has a tenant with a big credit name and that's paying rent or gonna pay rent when the operations start someday out into the future, if you have a date set up, you know they're gonna start, it turns in that property into a financial instrument and it makes it a lot easier to sell. So let's take a look at the next one. We're starting to get the idea of what we've got here. So this first one, they paid $260,000 for the property. If we if we look at the other ones, there's 850, 735, 690, 750, 5, 6. These other ones are just over $500,000, below $1 million kinds of price. But look at this one was 260. Why does that one stand out? And then if we look at more of the data, the year paid, when did they buy the land to go turn it into a Dutch Brothers? This one was 2021, and now we're in 2024 when I'm making this video. And if we go back and we look at that listing, it was built in 2024. So why'd they buy the land in 21 and then build a building in 24? Maybe they had the land, I'm guessing here, maybe they had the land and they didn't have a tenant and they went out shopping for a tenant and they found a tenant. They found Dutch Brothers. Dutch Brothers is willing to use this thing right out in front of Home Depot, and we're going to make it happen. I mean, I know this Pensacola market. There's a really good um, Firehouse Subs, like just down the street. It's one of the best Firehouse Subs numbers in the country. There's a Walmart around the corner. There's a Lowe's right there. There's a lot of retail up and down this corridor in Pensacola. So they probably got the land, figuring they'll figure out a use for it someday, and they did. So that's my guess looking at the timeline and the history of this one. Then if we look at this next one, Goldenrod Road in Orlando, I think this one, yeah. So this one, I try to pull this one up, and I pulled this. I was looking at it last week, and it was there, and the data was there, and everything was cool. And I started putting this together, and now this week it's gone. It's gone because it's under contract. Somebody's buying it. This one, someone's buying it. They bought the land for 850. I can't pull it up and show it to you on the internet because they made it disappear. They do that in commercial real estate a lot, right? So 850, they bought the land and they were trying to sell this thing. They were asking 1,978,000. And I put some yellows in here because I don't have the actual numbers. I didn't get the numbers before it disappeared. I'm guessing it's about a 5 cap, and that would make it like 98,000, or maybe it's like $100,000 or something in rent that they got off of it. Now, if we look at the traffic on the previous property compared to this one, the traffic was 37,500. This one, it's 37,400. That is some pretty similar traffic. Like, we just go find busy streets with no Dutch Brothers that have 37,000 cars a day going by, right? And the size of the property, 0.53 acres, 0.72 acres. And if we look at the access of that first one, see if I can get Street View to fly here. So it's this piece of dirt in front of Home Depot. The access is a side road. So we got a side road off the main road, and I was just keeping that in the notes. So we're on a corner. It's got, you can see the for sale signs on it and stuff here before it's built. It's just a piece of dirt. It's been for sale. It's probably for sale for a while before somebody figured it out. There's a median, and so it's not like super direct access, but it is 3 lanes of cars on either side of the road. And then you drive off like on your way to Home Depot, and then you've got Dutch Brothers on the corner now. Um, okay, so if we go back, we can't do that on the second one because it's already under contract. But if we look at this third one, this one is in St. Augustine, Florida. These are all Florida. I was just studying Florida ones for this particular case. They're asking $2,468,000. So 2 million bucks, NOI $119,000 a year in rent. They're asking 4.85 cap. So this one's priced a little more expensive than the others. A lower cap rate means a more price because it's lower yield, bigger ticket. If you got lower price and that same kind of cap rate over it, you get a bigger cap rate. It's a lower price. So it's the inverse. The cap rate goes down as the price goes up, and vice versa, right? If you're not used to calculating cap rates. So the traffic on this one's 26,000 cars a day. It's not as much traffic as the previous two we were just talking about. It's 0.79 acres. It's almost the same size as the 0.53 and the 0.72. We're starting to get a avatar of what kind of property these people are taking on. They're willing to do down to 26,000 cars a day. And they like the ones in the 30-something thousand cars a day. We know they sell. People buy these things. Like this one here is already sold, and it's just a couple days of me trying to track these. Okay, so the next one is in Clearmont, Florida. Let's pull that one up. That was this one here. And so this one, they're asking $2.2 million, $2,336 a square foot. You know it's getting built for less than that, right? The 5 cap, $111,000 a year in rent. So $111,000 a year in rent is what they're paying on this one. And yeah, it's look at that. They've got in this picture, they got 875. I think that's location number 875, I think is what they're doing. Dutch Brothers just growing. They're just adding locations across the country. They're doing drive-through. You can see the picture here, drive-through, drive in, get your stuff, drive out, take off with it, and make it happen, right? So this particular property, I went through and pulled some data. So this was the Clearmont one. There's 47,000 cars a day going by in front of this one's 0.72 acres. It's pretty close to the 0.79 or the 0.53 or the 0.72. We're getting, they like the 0.72 seems to be happening twice. Main street frontage, side street access again. So we're looking at Clearmont, Florida. Let's see if I can do a street view on this one as well. Let's blow this up. Oh, we're seeing it from the sky. Yeah, so they're developing a couple different things over here. So, but it was like drive in. I forget if it was on. I think it was on this side. It's like drive in, and then you get access to it. Yeah. So, I'm missing as we're going along here. The income, looking at the population in the area, it's got different numbers of population. That one's 11,000. That's a lot lower. That's 119. It's a lot more. So the population's bouncing around, but the income 65, 63, 112. That's a lot better. So the 112 higher income, lower population. So maybe these two are offsetting each other. 52 is a lower income, but pretty thick population. 73 is good, and 63 is good. So like getting kind of a matrix of population income. None of these incomes are down like below 50,000. The cheapest one on there, the lowest one on there is the income. Well, 50,000. Yeah, 50,000 seems to be the cutoff. So nothing below 50,000 in the lineup. They're taking ones above that with population. And then we got Argyle Forest. Let's take a look at that one. We've got this one, and they're asking 3 million. They got a higher rent on this one, $146,000 a year in rent, built 2024. So built 2024, I keep missing the going over those numbers. Like let's go back and let's look at the ages of these things. So that first example was 2021. And the rest of these are 23, 24, 23, 24, 20. And this is 2024 we're in right now. It's September when I'm making this video. And so some of these properties they're buying in 23, some of them they're buying in 24, and they're selling them in 24. And they're selling them as a Dutch Brothers. They bought them as vacant land, is my point. That's what I'm looking at here. How much are they paying for this land and how much are they selling it for? I should have done some math on that, but it's all more than $1 million. Like so this one, they bought it for 850 grand and they're selling it for 1,978,000. This one they bought for 735. They're selling for 2 4 something. 690 and they're talking 750 and they're talking 3 million. 565 and they're talking 2 million. So big spreads between the buys and the sells. And you should be asking, Luke, what about the cost of building the Dutch Brothers? Well, Dutch Brothers does kind of a hybrid model. Um, they these kinds of buildings are basically brought in on a truck. They've got some sections and they put the sections together and they go for it. They ask you to do the foundation and the utilities and the subterranean work kinds of stuff. And so how much does that cost? It's not the cost of the whole building, but you're doing some work. And if you've got a contract with someone like Dutch Brothers that says they're gonna, build the building and operate it, they're putting up the capital to build the building. They're making it happen. They're bringing it on their trucks, they're setting it up, and they're running for it. So you're doing a little bit and they're doing a lot, and together you're making it happen and you're collecting rent from them, even though they're the ones building the building. And they want the location. They don't want to pay for it. They don't want to buy it. They want to build it and run, so you're helping finance their operation by providing the land. And so if you bought the land and you said, Dutch Brothers, this is a location for you, and they say, yep, this looks like a good one, you got all these numbers lined up, let's do it, and they sign a contract with you, they'll ask you to do some work and then you do the rest. So you put up some money to develop the land and deliver it as a Dutch Brothers. But look at the spreads. So let's go back. I mean, these spreads they're all north of $1 million. This one's 565 to 232. I mean, even if it's a $500,000 of groundwork, which I don't think it's going to be that much, you're still talking about buying the land and the ground for 1 million and selling it for 2. You mark it up $1 million, or 750 to 3 million. That's still marking it up. You're marking it up like 1.5 million, So you get to mark it up a good deal in value for Dutch Brothers signing on and going for one of these contracts. And then once you have that set up, it's liquid, it sells fast. It's like this one in Goldenrod Road, Orlando, Florida. This one here that was listed last week, it's not listed this week because somebody took off with it. Um, I think there's a lot of opportunity to do this in lots of places in the real estate market, not just Dutch Brothers, but a lot of different names. And there's a lot of land that is for sale that's sitting there for years looking for the right user, and having the entrepreneurial spirit to take that land and pair it up with the right user can increase the value of these properties $1 million or more. Just looking at these examples I was throwing up on the screen. And I think that value add space in today's market is much more attractive to me than buying land, adding pictures, trying to compete with everybody else that's trying to buy a vacant piece of land, rural vacant land, and go sell it for more on the internet. I think these kinds of trades are where it's at in today's market, and I want to focus in on them. I want to tackle more of them. I want to study more of them. I want to figure out more of them. I want to make them happen. I'm working on it, and I'm sharing some of my notes and insights along the way. So thanks for listening. Thanks for watching. See you in the next one. Bye.